episode 115. Not in the books yet, but it's episode 115, Mark.
Hard to believe.
The guy resplendent in his blue suit is Marc LoPresti, folks. And you'll have to put up with a lot of showboating and backslapping, but deservedly so, because he's had a couple great calls recently and a number of great calls for the past few years. But those of you who have been with us all week know that Mark started the week when Pete had to go to a funeral, and Mark had a couple big winners to start off the week. So this isn't ancient history, folks. These are fresh meat, as we say. But anyway, welcome to the Rebel's Edge. We've got our producer, Jared, feverishly working and posting up various graphics and video as well. And of course, as I mentioned, Marc LoPresti in here going to give us some insights into the stocks that we thought were interesting on the movement side, whether we like them or don't like them at these levels, and then getting into some of the unusual activity, and we have a bunch. So let's start off with the macro minute, Mark. A lot of wringing of hands and people still worried about inflationary pressures. That's understandable because those pressures, as we mentioned yesterday on the show, are double digit across the board. Virtually everything from eggs on the highest end all the way down to lettuce, which is up like 17%. Everything that we buy and put in our bodies is more expensive. And most of what we buy or need, like rent, housing, things like that, have gone up. Right, Mark?
No doubt. And yet the consumer continues to demonstrate remarkable resilience, John. And there are lots of other indications that inflation is indeed cooling. And of course, the hand wringing you're referring to, today's or this morning's PPI print, which came in 30 basis points above expectation, not good. And also the jobs numbers, one of the key indicators that the Fed looks to determine if the measures they're taking to cool inflation are having any impact on the broader economy. The jobs numbers also coming in stronger than expected. 194,000 new claims versus 200,000 expected by the street. But I think, John, this will prove to be definitely some hot numbers this morning, but I am not changing course. I think inflation is cooling. I think we're headed in the right direction. I think the economy remains strong, and it remains to be seen if Jay Powell and his progeny get it right and don't overstep or get ahead of their skis in rising rates as they're expected to do up until that magic 2% number. I still see 25 basis points on the horizon at the next meeting.
Yeah. The Mester was saying 50 is what she's making the case for. But I agree with you. 25 is more likely. All right. Let's take a look at some of the top news stories of the day. One of them, Twilio. This is one, folks, that we had for unusual activity. And we had unusual activity in it just a day ago or so when the stock was $62. It screams higher today by some 18% or more, Mark.
Yeah.
I mean, a fabulous report out of them, 22-cent profit versus a 9-cent loss, and the revenue also coming in much better than expected.
Yeah, and listen, some of our viewers are probably going to get tired of me using the D word, data, but I don't really have a choice. This is another data name. This is a company that uses real-time customer data to help improve the communication of brands and products with those consumers, reducing the CAC, right, as we call it, the client acquisition cost, which is a good thing in an environment where ad spend is typically down, right? Just ask our friends at Paramount Global that reported on having 7% lower revenue on reduced ad spend in an inflationary environment, which is exactly what happens. But look, we have been bullish on this sector. We remain bullish on this sector. If you think about another name that's brought up in the same sentence as Twilio by a lot of analysts is Splunk. Some of our viewers will remember us talking about Splunk back in early December when the stock was in the 70s, the high 70s. The stock, when I last looked, about $108 a share, so that performing very well. So still anything related to data infrastructure, and data management, we remain bullish. And with this stock at around 78 cents, John, with a 78 bucks, excuse me, with a 52 range of 41 to 196, I think this still has a little bit of room to run.
Well, I happen to have that same opinion. Let's take a look at Roku, Mark, because this, of course, is one of the big success stories in streaming.
Oh, yeah.
Not because they produce a lot of content like Paramount Global or Disney Plus or any of those, but because they carry almost everything and make it available to people, in particular, people that want to subscribe can end up using this as a substitute for cable. It's an over-the-top, OTT play.
Yep.
But wow, look at these numbers: 16% earnings driven upside out of this report, and active accounts through the roof, Mark.
Yeah, look, there's absolutely no doubt. Anybody that's bought a smart TV during this past holiday season, and man, oh man, they were on sale, knows about this name and probably has a Roku embedded in their smart TV, as
Mhm.
so many people do. Look, these guys have 70 million daily active accounts, 100 million viewers overall. That is one half of the US broadband audience in total. Those are remarkable numbers. I also liked what I heard from the CEO in the earnings call, that the ad spend environment is actually improving, and maybe improving better for Roku versus the competition, because they have so many eyeballs and such a huge share of the market, that if I'm going to spend ad dollars, I'm probably going to spend it with Roku. So listen, I really like this, the earnings. I really like what we heard here. I think, though, this is such a big run up. Take profits if you have them. And then let's look at this thing again as we get into Q2 earnings season this year.
Never a bad idea to take profits. Something that we preach, both of us, Mark and I, for that matter, Pete, all the time, because you got to take them when you can, not when you have to. You don't want to be selling as it's dropping. You'd rather be selling into some of that strength. What about Cisco, Mark? Speaking of strength, stock's up 5%. This is
Yeah.
one that we love to kick because it's been down, but order cancellation rates are much lower than expected, and they expect significant growth all the way out into 2024.
Listen, they do, and that was propelled largely by demand for their cloud-driven networking portfolio of products,
Mhm.
notwithstanding a return to work, right? And a lot of their Zoom-like products from Cisco were very popular, obviously, during the pandemic. The question, though, is whether or not this is a blip, right? Whether or not these numbers were so strong because they finally got in line with the backlog of orders, supply chain easing, allowing them to catch up with that order backlog. So a lot of analysts recommending that you proceed with caution on this one. So this is another one where I would say, if you have profits on this name, take it, because the outlook is somewhat uneven for the next couple of quarters for this name.
Yeah, and Cisco has been a widow maker.
Yeah.
Um, Obviously, the technical term on Wall Street, folks, for those of you who are of the female persuasion, um, this is a dangerous stock to fall in love with, and hence the name widow maker, the moniker. Because if you've fallen in love with this, you've ridden it down from some dizzying heights to where it is. But
Yep.
it's a nice day for them today, so we're talking about it. What about Shopify, Mark? Talk about a not nice day. Down hard today. Basically, it was because the revenue guidance was light. Um, the report itself was strong, but the revenue guidance was really what the street focused on. And once they do that, you're going to see everybody sort of head for the exits for at least a couple days.
Yeah, there's no doubt about that. The other thing that the street and analysts that follow Shopify did not like was what they considered to be over exuberant spend on their customer acquisition in a questionable timing, right? When, particularly in the quarter for which they were reporting, there was undoubtedly reduction in consumer spending, that sort of consumer demand destruction that we talked about so much in Q3 and into Q4 for so many of the categories like apparel that make up so much of Shopify's base. So we are sort of neutral to bearish on this stock, and are going to just be watching it with caution as we go into the next couple of quarters here for 2023.
Yep. I think it's wise to pay attention to the consumer, like Marc said to start the top of the show. And some of those consumers are still spending aggressively, but an awful lot of them are shopping aggressively and comparing prices and so forth. Even those that shop on Shopify, Poshmark, Amazon, any of these online sort of marketplaces. And if you're shopping, you're probably not buying. You're looking, so you might get traffic, but most of these don't have much on the ad side. It's all on the, getting that spiff for something actually moving out the door. All right.
And that's why the street's so critical, John, and looking at things like the CAC, right, and what their spend is, because if they're misaligning the timing, you shouldn't be overspending on acquiring customers that are spending less. And that was the big critique of what Shop did in the last quarter.
Yep. Absolutely. An interesting play, but one that I think we'll be able to pick up a few shekels cheaper than where it is right now. All right. I've got that ETF for clean energy, Marc. That's my unusual activity for the day today. They bought 12,400 of these March 21 calls with the stock just below 20. So they're about $1.11 out of the money, above the market. This one was interesting because, of course, the ARK Innovation ETF has been one of the top performing ETFs this year. I'm not saying this is the same thing at all, folks. I'm just saying that clean energy is something that a lot of people that are into ESGs and some of the innovation stuff that Cathie Woods is into, they definitely take a look at some of these same names. To give you an example, Enphase, that one is 11% of this ETF. First Solar, Solar Edge, Vestas, Wind Systems. You get the idea of these clean energy plays. It's not Tesla, but it's a lot of solar names. It's a lot of wind names and things like that. When they bought 12,000 of these calls, that's 1.2 million share equivalent. They paid just 25 cents for them all the way out to March. And that tells me that that's a time decay issue that we don't really have to worry about the same way you have to worry about a weekly option or an option that is, say, $2 or $3. This is 25 cents. How much is this one going to go down between now and the third Friday in March? So March 21st calls in ICLN, that ETF for clean energy. That's my unusual activity. What do you got, Marc?
I like that one, John. I want to just make one quick comment on another tailwind, right? With ESG and these types of names. When you're in the kind of risk off rotation that we saw last year, propelled by interest rate and inflation fears, ESG concerns often sort of get thrown out along with other nice to haves in favor of have to haves when it comes to generating alpha, even for the large institutions who are liability driven investors, right? Pensions and endowments and things of that nature. We're seeing that rotation come back the other direction now. And we're seeing ESG and impact type investment goals coming back into the fore as we go into the second month of 2023 here. So I think that's going to continue to provide tailwinds for ETFs like ICLN.
All right. Now tell us about, speaking of tailwinds, I'll use that as the segue, or segue, as our friend Adam Carolla might say. How about X? Letter X. Marc talked about it Monday. Let's listen to what he said here, folks, because letter X trades up pretty good from Monday to today.
The unusual showing some bullish call activity in X, not the X-Men. That, of course, is U.S. Steel or Rebel Extra. That's U.S. Steel. We're seeing bullish call buying, 4,500 of the Feb 3050 calls, bought for around 10 cents over open interest, with the stock around $28.12. U.S. Steel, of course, announcing a $50 per roll of steel increase in stock prices. A lot of other steel making companies doing similar things in the previous days. This, I think, in anticipation of increased demand, industrial manufacturing coming back online, China reopening, things of that nature, perhaps the recession and inflation picture in the United States cooling, good global macro indications for the economy, good for U.S. Steel. I like this trade.
Yep. I think you had to like it because the stock traded up. It's at the high of the day right now, $30.25 or something like that. So $2 out of the stock. If you put 1,000 shares on, you invested 28,000. Congratulations, you made 2,000. If you bought 10 calls, you put a lot less on the market and you made almost the same money. So that's a good one. How about also, folks, for those of you who listen to us on Revolution Radio, Bulls, Bears, and Blockchain, we've got to cite this one because Marc had a great call there for Airbnb. Let's listen.
Let's start with a bull. It's reporting on Valentine's Day, and investors are hoping that love is truly in the air for Airbnb. This is a stock that's done very well since finding its most recent bottom in December, up about 40%. And we're expecting Airbnb, when it reports earnings on Tuesday, to tell investors, both through the guidance and through the numbers, that it is enjoying the significant tailwinds that we have seen drive the travel industry in general, with those explosive earnings and earnings guidance from airlines and other travel names. Part of what we like about Airbnb, Rob, is that this company keeps a lot more of the money that it makes because most people go directly to the Airbnb site as opposed to going through Booking or Expedia.
Bang. Well, all Airbnb did, folks, was jump double digits yesterday on those earnings. And obviously, Pete and I covered it yesterday, and we talked about you for that, Marc. But the issue here was that their revenue is up 75% since 2019, and yet their headcount never spiked the way many tech firms spiked. So they've been managing costs as well as dropping more to the bottom line, and they're adding another 3% today. Airbnb is.
Yeah, it's been an incredible trade. If you got in it Monday morning after hearing our Bulls, Bears, and Blockchain broadcast, you did really, really well in the stock. And if you put an option trade on, my God, you should be extremely happy. So we're thrilled with that. And I'm, still, John, really impressed by the continued resiliency and strength in the travel industry overall, right? Because it's not just Airbnb's business model and containing costs and scaling with low overhead and employee count. It really is continued strength in the travel sector, consumer demand that has really outpaced my expectations. If you look at anything I did back in maybe July on other programs or even on this show, I was far more sanguine about the outlook for consumer travel. It has just completely blown the doors off my expectations. Another thing that's blown the doors off my expectations is this bullish call buying activity in Lucid Motors, famously one of the bigger EV names. Investors snapping up the Feb 24 $12 calls, 7,200 of them bought for between 50 cents and 75 cents above open interest. The stock trading around $11. They're reporting earnings after the close on the 22nd, so just a few days from now. But man, oh man, I wish that I could have the same bullish outlook on this stock as the investors snapping up these calls are, because this company is still losing a blank ton of money. You can insert the 4-letter word there. They have a lot to prove in terms of their production capabilities and meeting demand for their EV vehicles. We've seen order cancellations. We've covered this stock in the options a couple times on Rebel's Edge, and I've talked about their increase in their order cancellations, which gives me serious concern for their profitability outlook. And finally, John, this thing has still not sold off and is still not as cheap on an EPS basis versus a lot of its competitors. So a head scratch on this one. If you made money with these options, take the money and run, because I don't see this one being sustainable. I am not bullish on Lucid Motors.
End of December, when everybody was doing that tax loss harvesting, stock was just over $6, folks. And, just in the last couple days, it's gotten over 11. It slipped under that now. But yeah, I think I got to be there with you on this, Mark.
It's a bull
All
trap.
right. How about this? We've got sports. We don't have Pete, who runs the sports huddle up in Minneapolis on WCCO radio every Sunday for all time. But we do have some interesting things that came out of the Super Bowl wives, the wags, the wives and girlfriends, as they say. And one of these was Brittany Mahomes, who put out that she thinks a lot of people need to apologize for what they said about this team, Kansas City, at the beginning of the year, because they basically said, without Tariq, the streak, and so forth, these guys are just going to mail it in. They're not going to get back anywhere close to the Super Bowl. A bunch of people even were thinking things like Russell Wilson going to Denver. Ouch. And I think those people do owe a pretty good apology for thinking that was a great trade. But Mahomes and crew, they really came through. And obviously, one of the most watched Super Bowls right till the end, because it was tied 35-35. And that's the first time, as Pete and I said yesterday, Mark, that anyone who scored 35 points has ever lost in a playoff game or the Super Bowl.
Yeah, I mean, but particularly in light of his injury that happened in the playoffs, and so much concern around how that was going to impact Mahomes' performance, and you could see the grimace of pain on his face on so many plays during the Super Bowl. But listen, always interesting to get commentary from the Wags. Which, by the way, you never want to have the W's and the G's in the same place if at all possible. Just a little friendly advice.
Yeah, well, yesterday, Mark, the day after Valentine's Day, is officially Side Chick Day.
Side chick, yes, which refers, of course, to
or
chicken
Side
sandwiches.
Dude Day,
Yes.
depending on how that works out. And we also had Travis Kelce really ripping into a lot of the critics as well. He, of course, the tight end that I came that close to making a ton of money on Travis. If he could have just caught one more ball, and it wasn't that he dropped any, because boy, he picked up one of those catches, Mark, about this far off the ground. So
it would have made your magic three-way parlay, if I remember correctly.
It
So
would have
close.
been, woulda, coulda, shoulda.
So
But
close.
he also had some things to say about critics of the team, and that they should be so lucky as to have followed and bet on the Kansas City Chiefs. And he's right, although, that game was so tight that you can't really say that the Eagles didn't give it their all. They obviously did, but that one holding call at the end of the game made a huge difference, because if they have to go to overtime for a Super Bowl, that would have been pretty special. And I can't guarantee that we would have had the same outcome, because the Eagles were playing pretty darn perfect ball with basically just that one fumble from Mr. Hurts that really did hurt.
And certainly that call being one of the most controversial elements of that game, and to your point, an outcome-changing call. But so I got to ask, John, and I'm sure our viewers are all wondering, now that football season's over, what are we covering on the sports segments for the next couple of months?
Well, I'm glad you asked, because there are two new football leagues out there, Mark. The XFL is making a comeback. That's the one that Dwayne "The Rock" Johnson put a bunch of money into.
Yeah.
And he's got backing from a number of networks for that. So that'll be interesting. Pete used to coach in the XFL, the Chicago team. And then we've got the USFL also. So we've got two competing, I don't know if I'll call them franchises, but because I don't even know. Some of these, Mark, some of these new competitors to the NFL are not owned by a single owner. They're rather jointly owned by the collective
of
sorts. And so that's an interesting thing. But I'm sure we'll be able to cover hockey and spring baseball and all the rest. It'll just depend on who's making headlines and why they're making those headlines. But
A little bit of basketball too, maybe. I had the pleasure of going to my first Miami Heat game last week when I was in Miami, and I got to tell you, as a lot of our viewers know, Miami just does sports and basketball a little different. If you've never been to a Heat game in Miami, bring your dancing shoes, put on your salsa dress, and go. It's a hell of a lot of fun, and the team is pretty strong.
yeah, well, I can't wait. Next time I'm going to have to go.
We'll make sure of it. Hey, John, before we wrap, I got one plug, though. We talked about Bulls, Bears, and blockchain. As you know, we're going to be recording today, and people will be able to hear it tomorrow with our first special guest coming on. It is none other than the Mooch, Anthony Scaramucci, who's going to be joining. He and I are going to be doing a fireside chat talking about his outlook on crypto, why he remains so bullish, the impact of regulation by enforcement, and so many things that our listeners, I know, are going to want to watch. So if you're a Rebel's Edge fan, we encourage you, please tune in. Bulls, Bears, and Blockchain. You can find us on Spotify, iTunes, all the usual podcast channels.
Great advice, and it'll be a fun show. Well, folks, thanks for joining us today. I'll be back with 3 at 3 at 3 p.m. Eastern. I hope you have a great one. Remember, no Rebel's Edge Monday because it's President's Day, so there won't be any trading in the United States that day. So we'll see you Tuesday. Bye.